Today we are going to cover the topic of fundamental inventory management KPIs that will help to navigate and grow in these unpredictable times. And this is what there is like a saying that what can be managed, what can be measured can be managed. So only in case if we know how to calculate, if we track some numbers in dynamics, it is possible to manage these processes. So it's some kind of a basement for the successful management of inventories. Before we go to the topic itself, just briefly, we wanted to share about our company, and today there are going to be two speakers. It's Helen. She's a product director of one of our solutions for actually inventory optimization, and Helen has a very extensive experience in working with retailers of different verticals, of helping them to automate and optimize their inventory management processes. Hello, Helen.
Hi, and thank you for such warm words.
You're welcome. And the other presenter will be me. My name is Anna. I'm managing the business development at LEAFIO company, and I also have a good experience of working with our customers, and actually making our customers happy is one of my main goals. So a little bit more about our company, what we do. LEAFIO is a platform that helps to automate and optimize different areas of the supply chain for retail. This platform includes three main parts and three main modules. So the first one is inventory optimization. It's the module that helps to efficiently manage the inventory processes, inventory management processes, and including the main part of automation, the replenishment process. And additionally, this tool provides very enhanced analytics module, very enhanced BI module that helps to deep dive into different processes to identify some bottlenecks in this inventory management. And that's actually the solution that helps to cover the KPIs that we are going to talk about, and we will share just a couple of examples what reports can be used for managing the KPIs and for measuring the KPIs. The next one is a promotion intelligence solution. That's the module that helps to cover their promotion management processes, so manage different promo campaigns to be able to forecast sales for these promo campaigns and everything that is connected with the efficient running of promo campaigns, because we certainly know that promo is one of the big pains for retail right now. And the third solution is a solution that helps to cover the end-to-end merchandising process, starting from creation of the floor plan, proceeding with creation of the equipment, placing equipment on the floor plan, and of course, one of the main parts is the macro spacing and managing the planograms. Those three solutions, of course, like it's a synergy, but they can use separately as well. Regarding our team and regarding us, we've been in the market for many years, and currently we have projects in 17 countries. We implemented more than 160 projects with the retailer, and we have the team around of 100 employees that helps us to reach some good goals for our customers. Regarding the retail verticals, I would like to say that we work with different verticals of the retail, and we have experience in almost every vertical. Mainly, we work with groceries, with drogeries, but also we have customers in DIY, we have customers with pet stores, some petrol stations, pharmacies, and so on. So with this being said, let's switch to our topic and actually talk about the KPIs. Before we go to the measuring, I would like to ask Helen to actually kind of highlight why it is so important to talk about KPIs and why it's, especially now, why it's important to measure those KPIs. Helen, the stage is yours.
Yeah, thank you, Anna. Thank you for the introduction. So yes, basically we are living in very interesting and difficult times. The degree of uncertainty has increased greatly. Global crises that are alternating each other have a strong impact on the world and mainly in supply chain as well. So thus the container crisis has led to the destabilization of the supply chain and the lack of necessity goods in some parts of the world and excess inventory stocks in others. And in order to ensure themselves, companies began to create this excess inventories, increase their stocks, creating some reserves in case of the recurring of such a phenomenon if talking about the container crisis. The war in Ukraine has a strong impact on the world grain markets and greatly affected the European market as a whole. The crisis in Kosovo and Taiwan has also affected supply chains as well. So the imposition of embargoes, sanctions, and the conflict's escalation strongly affects the stability of the supply chain. And in such circumstances, it is critically important to keep track of the business indicators, the business evaluation. And since the inventory is one of the, let's say, main key assets of the retail companies, it is important to calculate and analyze the indicators of inventory management. So on one hand, we are talking about, let's say, fairly obvious things, but on the other hand, our implementation experience demonstrates that even such basic indicators are not always calculated, and even if they do, the dynamics is often not tracked over the time. So what we attribute to the main key performance indicators in inventory management, it is basically the stock balance or inventories, sales, overstocks, out of stocks. We are calculating them in terms of the lost sales, so in money, inventory turnover, and the percentage of availability. I hope that all those indicators are rather obvious for everyone who are present on the webinar. But as I have mentioned, on our experience, not all companies calculate those indicators correctly, and most importantly, analyze them correctly. And our main today's purpose is to show you some examples of how these KPIs could be analyzed in order to increase the efficiency of your retail business. So just a couple of words regarding how these KPIs are correlating with each other and how they are affecting each other. So starting from the very beginning, the average stock balance reflects just the daily average number, the daily or weekly or some during some longer period of time, the average number of each particular SKU per certain time period. Sales, the amount of money which is generated during the certain time period as well. And actually it is the result of the retail business activity. That's why there are numerous of departments whose task is to keep track of the sales and influence them in a positive way. It is operations, commercial department, marketing, sales, logistics, and other departments in the retail chain. That's why this KPI is often considered to be the key indicator, while the others are being abandoned. And definitely we see that it is not the most right way. The third one is the overstocks, basically the excessive products above the, let's say, the required for sales and for safety stocks limit. It is the inventory that is not needed and that negatively affects the inventory turnover indicator. Overstock is so-called an anchor that immobilizes capital and doesn't let invest money in business development or scale the assortment range, the assortment metrics. Lost sales, basically sales that haven't taken place due to the out of stocks. They are most common in the category of the fast moving items. It is so-called hypothetical sales that could have happened but didn't because of the out of stocks, so basically because of the zero balance. Inventory turnover, the correlation of stocks and sales. Inventory turnover, it is the most objective indicator of let's say health or balance between stocks and sales. And the last but not the least is the percentage of availability. It is the percentage of SKUs that are available on the shelf in terms of the necessary product range. And now we will deep dive into each KPI and we will take an overview of these indicators using some examples of analytical reports which are generated by the LEAFIO inventory optimization platform. Analytics is the only part of the module in the system, and the main task of our solution is the new level of inventory management. So we are going to the first KPI, and it is the stock balance or inventory. And Anna, could you please share your experience on this KPI?
Yes, of course. Thank you for highlighting the main KPIs that should be tracked and summarizing one more time that it's important to track all of them. It's the basics actually, but of course there are some more, but it's the basics, and it's important to analyze them like connected with each other because, for example, the high availability, high percentage of availability, it may lead to very high inventory turnover in days, and vice versa, the high inventory turnover may lead to like very low percentage of availability. So let's talk about the first one. It's the KPI that is the inventory, or actually like the stock balance itself. How it is calculated, it is basically the sum of average daily stock balance divided into the days and period. It's very important to understand not only like the level of inventories or the level of stock balance, but to analyze that in dynamic in terms of like the weekly, the monthly, the yearly numbers, for making these numbers, it is very good to apply so-called like analysis that will help us to analyze these like compared of some similar periods in different times. For example, comparing month to month, or year to year, or months of 1 year, months of another year, and so on. So like Helen shows us, we are choosing two different months, and we can see here the delta, and we can see here their average stock. So we can see that the average stock increased for 1%, or like in this case, it increased for 19%, which is a bad consequence because it means that we are investing like more money in that. But of course, it's important to analyze that in correlation with some other KPIs, because maybe there is the reason for increase in this average stock balance. But we can see here that their sales also went down, that their average overstocks increased, and so on. So it's kind of a bad consequence in this case. And the other important part when we are talking about the stock balance is, can you please return back to the presentation? Yeah, and the next slide. When we are talking about stock balance, it's important to analyze not only the level of stock balance, but it's important to analyze and see the structure of the stock balance, because the structure of the stock balance can be different. It basically, if like to simplify, it consists of several parts. The first part is the merchandising layout of the safety stock. This is like the part of the products that are on the shelf, and we needed to keep the shelf look good. The other one is actually like the basic, and it should occupy the main percentage of the inventory structure. It's the sales, so it is basically the stock balance that is needed for sales. And the last one is the overstock, so this is the excess balance that is not really needed for us, and we should try to get rid of it. That's why it's important to analyze the stock structure. Helen is showing us also the report. We are showing it in our system, but basically you can create these reports. Some of them you can create in Excel files and analyze them in Excel files as well. This report shows us the percentage of like the stock structure, so the amount of money that is invested in the merchandising layout, it's the gray part in our case. The amount of money that is invested is actually in sales, the green part, it's the main part, and the amount of money that is in overstock. So we should try to get rid of these overstocks and at least like try to decrease this level of money investment. Why it is important to analyze that? For example, we had a case with a company that they didn't have any kind of problems with the overstocks, but at the same time the inventory turnover was not satisfactory enough. And during the project implementation, we tried to work with that. We tried to analyze where this happened. And when we took a look at this report, it became clear that the amount of the merchandising layout or the safety buffer is almost equal to the amount of stock balance that is invested in sales. And it shouldn't be like that, of course. And we started for some products, like maybe it makes sense for some branded products, but for the majority of the assortment, it's important to work without that. And we started to working with their merchandising layout. We decreased the merchandising layout for some products, for some categories, and we actually reached a very good level of inventory turnover. Another point that should be mentioned in terms of analyzing the stock balance is actually the shrinkages. It's the part that the products that like kind of got expired because their amount wasn't the amount of order wasn't like was more than it was needed actually for sales. Sometimes it's there are some problems of recording this data in the ERP system, and there are some inconsistency between the ERP system and the real data. And for this, we created the report that is called the phantom balances, that helps us to identify this kind of balances and to be able to see and to highlight for the managers what are the problematic items, so that they can go and check that, and maybe go write off these products, or make some other conclusions, return them back to the supplier, and so on. And actually to check if this product is in the stock, or we just like have it reflected in our ERP system. So this report shows us and highlights the items that statistically should have sales, but they didn't have sales for some period of time. So it's kind of a sign for the manager to go and check what's wrong with this kind of product. So with this being said, I'm giving the ball to Helen, and she will talk about one of the basic and favorite KPI for everyone that is to be tracked is, of course, like the sales.
Yeah, thank you very much. As I have mentioned at the very beginning, sales are rather important for any retailer, and the sales are being keep track of, I guess, in different levels. But now I want to clarify how the sales influence and how we influence the sales in terms of the inventory management. So the most simple and the most used indicator for calculating it. And the sales volume actually allows us to determine the large number of indicators that are necessary for the retailer. So these are the changes of the customer demand and the customer trends, some demand trends that influence the retail, and retailer must keep track on this trend to be on the wave of the customer demands. The effectiveness of the promotional activity, seasonality of goods, assortment range planning and structuring, and the decrease in stock of some goods and increase in the volume of others. So everything is retail is based on sales, and we were talking about it earlier. So we would like to share our investigation of observation of demand specifics in various retail industries. So 30% of sales in food retail, of course, it is the particular example. It is not like in the whole food retail, despite some different formats or the size of the retail chain, but still it is like a particular example of our customer. And for this particular example, 30% of sales in food retail are attributed to fast-moving items. It is clear that in such retail sectors as drogeries, as health and beauties, as office suppliers, etc., and especially in distribution, the situation is even worse, if we can say so. So the table below indicates that it is important to understand the stock structure and to be able to replenish and store the slow-moving goods properly. And also I wanted to share some interesting case in terms of inventory management and sales. This is like a slab overlap with the assortment range management, but it is actually about the sales. So our replenishment automation solution implementation was started as we have planned for with one of our customers, and we were actually able to get ahead of the schedule because all the project was moving very fast, and our customer was very active during the project. And it seems that we did everything needed and even more, but the improvement that we usually get in terms of inventory optimization and inventory turnover was relatively weak, relatively low at the second stage of the implementation. We decided to further analyze the situation, and with the help of the ABCD analysis, it is the type of analysis that you see on the screen. Just a second. Yeah, and with the help of the ABCD analysis, we realized that 60% of the assortment range belongs to the D category. Just a second, yeah, to the D category. We can also make it like this. Yeah, and as soon as the customer started to work with the assortment metrics, with the assortment range, focusing on the A, B goods, even C, and withdrawing the D category from the assortment range, the situation really improved significantly. And as a result, the sales for this particular company increased by 56% without a significant increase of inventory. So that is how we can influence on sales through the increasing of ABC, so increasing of the quantity of needed for the customer items and SKUs without, let's say, some additional efforts in terms of some increasing increasing the demand in terms of promotions and and other types of the demand stimulation.
Helen,
So,
and I can also see in the report some XYZ. Can you please maybe also explain to our customers, because I think it's also kind of it's an addition to ABCD analysis, but I think it's also an interesting point to be analyzed.
it is like an additional glance for analyzing the ABCD. Firstly, we have implemented this report in terms of only ABCD analysis, so we can, as I have shown you, we can like build it in terms of sums, in terms of margin, and in terms of numbers of sales, like in quantity. And when our customers started using this analysis, we understood that it is great to see the D categories, of course, the SKUs that are in D category, but we also need to understand the situation in terms of the variability of the demand. Basically, this XYZ determines the volatility of sales for the particular SKUs. So if talking about the, let's say, X SKUs, even if they are in D category, they are very predictable in terms of demand. So probably they're not so relatively problematic for us to keep them in the assortment range. But if we are talking about the Z SKUs, these are SKUs with very high variability of demand, and that means that despite their D category, so the sales are very, very low, relatively low in terms of the whole assortment, in terms of the particular category, of course, and their sales are so reliable, and that means that we need to maintain the higher stock balance for these particular SKUs to cover, let's say, the demand. And these SKUs are the first candidates to be withdrawn from the assortment range.
Thank you. Thank you.
Yeah, thank you for the question. So we can move forward. Yeah.
Yep, of course.
Okay.
This is mine, yes. The next the next KPI we are going to talk about is like very interesting. In some means it's kind of questionable, and because it's no clear way to measure it like very precisely. But still, this is a very important KPI, which is like lost sales, and it's very important to measure that. So what is basically lost sales? It's in like simple, there is like a formula on the screen, but in simple words, it's the sales that statistically should have place, but for some reason, not for some reason, but because the product were not available on the stock, they didn't happen. So basically the company loses money here because some products might be unavailable. So why it's important to analyze this KPI? We prepared some like rather simplified example, but it will help us to understand why it's important to calculate lost sales and why it's important to pay attention to this kind of KPI. Let's have, for example, like the current data, it's like we have the sales of 1 million, the net cost 800,000, total revenue 200,000, operation 180,000, is 20,000. What will happen if we increase the sales for just like 1%? Like, for example, if we make those goods that were unavailable, if we, due to the correct ordering process, make them available. So the sales will increase, their net cost, their total revenue will increase, but operational expenses will be at the same level. So in this case, we will get the net revenue on 10% higher, and it will be 22,000. And what will happen if the sales will increase on 5%? It will mean that they're like the same data will be like the sales, the net cost, the total revenue will be the same, it will increase, and the operational expenses will be the same. So that means that we will get their net revenue on the level of 30,000, and it is 50% more than the initial net revenue. So of course, like, this is very simplified example, but it helps us to understand why it's important to calculate lost sales, and why it's important to pay attention to the availability of goods, and pay attention to this to this KPI. But of course, it's like a kind of hard to calculate this hypothetical KPI. And moreover, in some cases, it's hard to analyze what are the reasons for this KPI. But it's important for like the reason for each particular lost sales. But it's important to kind of aggregate these lost sales, aggregate the reasons for lost sales, to understand for what categories we have lost sales, and what is the aggregated main reason of lost sales. And we have a report about that on the what can be the reasons for lost sales, and it gives the manager the possibility to precisely work with like this main reason why these lost sales happen. From our experience, the main reason of when lost sales happen, it's because the supplier, one can be it's because the manager didn't order the amount, and the other can be that the manager ordered the amount, but the supplier didn't deliver this amount to the store or to the central warehouse. So that's why it's important to analyze the supplier's reliability, the supplier's performance, the supplier service level, and we have a report that will help to have everything in one page about their supplier, and to understand what is his service level, how he is delivering the goods, what is his percentage in our sales of the company. And more important, it helps us to analyze these KPIs and these metrics in dynamics, so to see how he's progressing or he is regressing, maybe to think about changing the supplier to someone else. And these reports can be used. We know that the vendors, like the representatives of the retail, they communicate with the suppliers on like monthly, yearly basis about some better conditions, and it's very good to like just take a screenshot of this report and go to the supplier and use this with negotiations with the supplier, and tell them, okay, we see that there is like your service level is very low because you didn't deliver the product. So yeah, this is one of the very important reports to be shown. And the next one, the next KPI that we are going to talk about, it's like the opposite KPI when we have like the overstock, like we have the excess stock. And it's also important, very important to analyze that, and very important to keep track of this KPI.
Yeah, so overstocks, it is like an excess of products or goods that occurred due to two basic reasons. The first reason is the demand decrease or lack of sales, so that's why the sales decrease, and inventories are like higher than we need to cover this demand, this decreased demand. And due to the second reason is due to the excessive ordering of products, and we face face such kind of a problem usually when the customer doesn't have the inventory optimization tool, or this inventory optimization tool is not automized on the, let's say, high level, and people are influencing the ordering process. So basically, overstock is the difference between the current stock and the target stock level, and the target stock level could be like calculated in a very simple way. The way we are talking about it on the slide is very simplified, but still the average daily usage or sales that are multiplied on the supplier lead time. Of course, this calculation is much more complicated because we need to take into account like the minimum order quantities, seasonalities, the planned and ongoing promotional activities, and some other factors that could be relevant for different categories of the product range. So what is overstock and how to analyze it? It should be continuously tracked over time with like a short comparison iterations, just to be able to manage the dynamics. That's why we have created like an example of a report that could help to analyze the overstocks and dynamics. Basically, it is very useful when managers do not need to deep dive into some specific tables, like they see everything in a visual form. For instance, here we have highlighted the categories that are going worse in terms of the overstocks. So that's why we can just analyze a couple of them that with relatively high overstocks and see the particular SKUs in terms of the particular locations. And the main key point, as I can say in this report, is the dynamics. So we need to be sure that even if we have overstocks and it is like we are not living in an ideal world, that's why for sure we will have some percentage of overstocks due to some reasons that could be even objective. But still, we need to be sure that the level of the overstocks is decreasing. And when we see the situation when during some large number of weeks, for example, like in this example, 4 different weeks, we see the negative dynamics in terms of numbers of the overstocks in money. And it is like a question, why is it happening, why the overstock is increasing, and we definitely need to make some managerial decisions to decrease the level of stock for such particular SKUs. And what can be done in such kind of a situation? So basically there are 3 options: to return to the supplier if the supplier has this option, and if we understand that it is not very expensive for our company. The second variant is to conduct a promotional activity. Yes, and in this case, we also need to calculate if it is suitable for us in such kind of a particular case, and to make some internal relocations or some internal relocations of the problematic SKUs. For instance, we have like some particular SKU which is problematic for us, and we see in the report that we have the excessive inventory in terms of some locations, and we have a necessity in terms of another location, and we just make this internal replacement not to increase the the inventory turnover as a whole in the retail chain. It could be an option to see this information in the report, or of course, and it is even better not to analyze and not to deep dive into each particular SKU, but make it in the automatic mode, which is also available in our solution. Okay, so let's move forward.
Forward. We have a question from our participants. How do you get the reasons of lost sales?
Thank you for this question. Nice one. We call the reports we call it like lost sales reasons in the system, and internally we call the report which is using the artificial intelligence. So basically it is not using the artificial intelligence, but the algorithm of identifying the reasons for the lost sales is so complicated. So we call it like an artificial intelligence. Basically, we have created a tree of these reasons of the lost sales, and we are putting each SKU with the lost sales on the previous week to this tree of decisions, and afterwards this SKU passes each branch of this tree, and we are identifying and understanding the reason for each SKU in each storage location. For example, the first reason, as Anna have mentioned, so the main reason due to our observations of the customer, the main reason of the lost sales is the reliability of the supplier, and the first stage is if we have ordered and if the supplier has delivered this ordered quantity on time, and afterwards if yes, we have ordered and yes, the supplier has delivered, we are moving forward like to some other reasons of the lost sales. Of course, as it is fully automated procedure, it is not a manual work. There could be some examples, as we see that in practice it is in some situations, and it could be like a situation when there is a couple of reasons. So maybe the supplier was late, but the manager has decreased the ordered quantity as well, or the supplier was right, but we have manager has decreased the ordered quantity manually, decreased the quantity that the system ordered if this order was not auto-sent. And at the same time, the demand increased, or the promotional campaign started, and we forecasted like the lower quantity than the demand was. So basically, it worked fully automated in full automatic mode, and for let's say 80–90%, the reason correlates the truth, the real situation. But sometimes, of course, there could be some situations when it is like a couple of different reasons, and we have identified only one of them, for instance. Okay, Anna, any other questions, or because I don't see the chat as I'm demonstrating my screen?
Yeah, we can proceed.
Okay. So the last two important KPIs are inventory turnover and the percentage of availability. So basically, it is important to fill the shelf with high turnover goods, so-called demand generators, in order to improve the inventory turnover ratio. Stock structure should be like dominated with such products to decrease overstocks and to improve sales performance per square meter of each shelf. And first of all, when we are talking about the inventory turnover, we need to understand the dynamics, and these dynamics could also be analyzed with the help of the like-for-like analysis that we have demonstrated at the very beginning. It was the first report Anna was talking about, but now I want to demonstrate the example of a report when we are analyzing the availability and inventory turnover at the same time. Why it is important? As you know, usually our customers ask us what are the main key performance indicator for the demand planner, or people who are responsible for the replenishment process and the inventory management as a whole. And usually we are answering that we stand on the point that the availability and inventory turnover should be analyzed at the same time, as they are reflecting each other. So if only one of these KPI would be analyzed, like for example, if the availability would be analyzed, in this case you can have the excess inventory, and on the other hand, if it would be only inventory turnover, in this case the availability could be rather low, as due to zero stocks and zero balances, zero stocks and zero sales, the inventory turnover would be decreasing at the same time. So we stand on the point that it is very important to keep track of availability and inventory turnover at the same time, and understanding the dynamics of the inventory turnover. And for example, we need to understand why at the same time the inventory turnover was going worse on the last week of this time period, and at the same time the availability, the percentage of availability also decreased. And we need to understand like reasons, we need to understand the categories which were like going worse in terms of this particular manager, to understand what basically went wrong, and so on. So it is a point of analyzing, and a very important point here, just to finalize like the demonstrating of the examples of the report, is that we can provide, or you can make all these reports on your own, or some other vendors could provide you the reporting. And it is a common problem among managers now that I don't have time to analyze the situation, as I have a lot of work. That's why it is very important to have some tools that automate some routine tasks to ensure that the manager would definitely have time to analyze this crucial for the retail business KPIs. I think
sorry for interrupting. It's very convenient that the system highlights in green colors some positive consequences and in red colors some negative consequences, so that the manager can, like at one glance, just look at something bad, for example, and pay attention to that. So it's pretty cool and pretty convenient.
Yeah, you're right. Absolutely right.
Okay, so thank you for highlighting the last two KPIs that we talked about. Thank you, our participants, for joining us. We will be happy to speak with everyone after the webinar to arrange a meeting with you and go through some KPIs that will be important for your company. And I hope that this topic was interesting and insightful for you. We are going to hold to conduct some more webinars in September, October. So please keep track of our activity, and we will be happy to see you. Have a good day, everyone. Bye-bye.
Yeah, thank you very much. Bye-bye. Have a nice day.